Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're taking a deep dive into the Q2 2025 earnings call of a major biopharmaceutical company, Biogen. We've sifted through all the comprehensive Q&A, management commentary, financial reports, really everything. Our goal, to bring you the critical takeaways, those unexpected wins, and that evolving narrative investors absolutely need to understand.
That's right. And Biogen is, well, it's a fascinating case study this quarter. They're really navigating a significant strategic pivot. We've known them for years for their traditional stronghold in multiple sclerosis, right? But they are very clearly shifting gears now. They're aiming to become this diversified powerhouse in neurology and also rare diseases. So today we're going to explore how their recent performance not only reflects this shift, but also what it truly means for their future trajectory. And, for you, our listener, trying to stay ahead of the curve.
And what a quarter it was. Let's kick things off with the headline numbers, because Biogen delivered a strong second quarter that really grabbed attention.
Absolutely. Yeah, they showed significant beats on both the top and bottom lines. That's exactly what the street loves to see. Their non-GAAP EPS came in at a remarkable $5.47. Now, for those less familiar, non-GAAP essentially means earnings adjusted for certain one-time costs. It gives a clearer picture of the company's core ongoing profitability. So this $5.47, it substantially exceeded the $3.86 consensus estimate. That's a massive 42% beat.
Wow, 42%.
Yeah, and on the revenue side, they hit $2.63 billion, comfortably beating the $2.32 billion estimate. So that's a 13% beat, and it also represents solid 7% year-over-year growth.
So a pretty clear beat and raise then. How did the market react initially? Did it pop?
It did. The initial market reaction was notably positive. The stock saw a pretty significant intraday pop. Now, some of that early enthusiasm did temper a bit by the close, but the underlying message from management was solidly bullish. And the street largely welcomed what was described as a clean beat and raise. You heard analysts quick to label it as a needed proof point, proof that Biogen's long talked about return to growth story is, well, truly starting to take hold.
Right, moving from promise to actual execution.
Exactly. It signals that shift in the eyes of many investors.
That's a powerful signal. Beyond the headline revenue and earnings, what other key financial metrics stood out? Anything supporting this narrative?
Yeah, a few things. We saw robust gross margins holding at 75.6%. That speaks to their pricing power, manufacturing efficiency.
Pretty healthy margin.
Very healthy. And critically, free cash flow came in at $134 million. Now, free cash flow is crucial, right? It tells us how much cash a company generates after accounting for capital expenditures, basically how much money they have left over to, say, pay down debt, buy back shares, or invest in future growth. And this is vital for a company in a strategic pivot like Biogen. It gives them that financial flexibility needed for R&D and business development.
Makes sense.
And perhaps most telling, rare disease sales reached $543 million. That's a 2% year-over-year increase. Now, 2% might sound modest, but it's actually a very strong early indicator. It's signaling the initial success of their strategic reorientation, moving away from being overly reliant on that legacy MS franchise.
Okay, that reorientation towards rare diseases seems to be the engine here. Let's unpack this more, get into the core drivers of this performance and where the company is truly heading. What did management emphasize? What were the key levers?
Well, management was very clear. The momentum in rare diseases is successfully offsetting the erosion they've been seeing in their multiple sclerosis franchise. I mean, that's been a long-term challenge for them. They highlighted Vumerity's strong growth and its continued market exclusivity. That's a key contributor to their cash flow right now.
So Vumerity is kind of holding the fort.
Exactly. It's part of their legacy MS portfolio, but it's managed to maintain its position, provide a steady revenue stream. It's essentially buying them time as they build out the new areas of the business.
The strategic holding pattern for MS, while the new growth engines spin up. Okay. And speaking of new engines, we absolutely have to talk about Leqembi, the Alzheimer's treatment. Big focus. What's the latest there?
Leqembi is absolutely critical to their story, no question. Global in-market sales for Q2 stood at approximately $160 million. And what's particularly encouraging is the robust sequential demand growth. Management actually noted this. They said it's the first time the Alzheimer's market has seen new patient starts grow about 15% quarter over quarter.
15% quarter over quarter, that's significant.
It really is.
Yeah.
And this isn't just good news for Biogen. It's a very encouraging development for the entire anti-amyloid class of treatments.
Yeah.
Those drugs that target and remove amyloid plaques in the brain, believed to play a role in Alzheimer's. It suggests that the whole infrastructure for diagnosis and treatment is finally maturing, overcoming some of those initial hurdles we saw early on.
Okay, interesting. And that leads us to the future, the pipeline. Here's where it gets really interesting, right? What advancements did we hear about? What could be the next growth drivers?
Yeah, pipeline front, several key developments. They secured a positive CHMP opinion for zuranolone in Europe. Now, CHMP, that's the Committee for Medicinal Products for Human Use. It's the European Medicines Agency's scientific committee. They provide the recommendations for drug approval. So a positive opinion is a huge step towards market approval across the EU. Could open up a significant new market.
Big step for zuranolone. What else?
They also initiated 3 new phase 3 studies. One is a pediatric study for Sclerosis, and 2 are for fulcertab, so broadening their development strategy.
And what about solonersen? That name has been buzzing for a while. Felt like there was some news there.
Yes, solonersen is particularly exciting. We heard about promising interim phase 1b data for it in spinal muscular atrophy, SMA. This data showed proof of concept for what could be a truly next-generation therapy.
Why next gen? What's the big deal?
Well, it could potentially offer high efficacy with just once-yearly dosing. Think about that compared to current SMA treatments, which often require much more frequent administration. A once-yearly option, that's a substantial advance. Improves quality of life, adherence for certain patients. It's a very strong signal for their gene therapy ambitions and rare disease expansion.
A potential game changer if it pans out. Okay, serious long-term play.
Shifting gears back to the financials. What did they say about guidance for the rest of 2025? How confident are they feeling? Right, the strategic financial side. Biogen raised its full year 2025 non-GAAP EPS guidance. New range is $15.50 to $16. That's up from their prior $14.50 to $50 to $15.50.
Yeah.
Clear signal of confidence there. Now, interestingly, they expect total revenue for 2025 to be approximately flat compared to full year 2024.
Flat revenue, but raised EPS. How does that work?
It might sound cautious on the revenue side, but it actually reflects the strong first half performance. They are anticipating increased competitive pressures on their MS business outside the U.S. in the second half. So they're acknowledging those headwinds, but they're confident enough in the new drivers, Leqembi, rare diseases, to still raise the EPS guidance. And that raise is underpinned by mid-single-digit revenue growth expectations within the year and stable operating expenses. Shows disciplined financial management.
Okay, so let's talk about that discipline. Operational discipline, managing costs. How are they doing there? Because that can make or break the ability to invest.
Yeah, you're absolutely right. And operational discipline was a real standout this quarter. Operating expenses actually fell 6%. That significantly boosted their margins into the mid-30s. And this isn't just about, random cost cutting. It reflects a more efficient operating model they're building.
Efficiency driving margins.
Precisely. And then there's the big announcement. A $2 billion expansion of their North Carolina plant. That's not a small investment. It signals really strong confidence in future volume demand for Leqembi. They clearly anticipate much higher uptake, and also for their upcoming gene therapies. Plus, this expansion strategically reinforces their claim of minimal impact from new U.S. drug tariff policies because they'll have more domestic production capacity.
Smart move. And what about that Fit for Growth initiative we've heard about?
Yeah, the Fit for Growth initiative, their big restructuring program, is well on track. They expect it to deliver $1 billion in gross savings and $800 million in net savings. This is a fundamental shift in their cost structure. It's making them leaner, more competitive for the long haul.
So Fit for Growth isn't just about saving money now. It's about setting them up for future agility. What about reinvestment? Are they plowing those savings back into R&D, especially with this new efficiency?
That's a great question because, it's not just about cutting. They clearly indicated additional investments in R&D in the second half of 2025, particularly to accelerate and expand clinical development in rare diseases. So yes, they're actively cultivating that new pipeline, areas like gene therapy, advanced neuroimmunology, where there are significant unmet patient needs. They're also advancing solonersen, the SMA drug we mentioned, to registrational studies. That means moving it into the big pivotal trials needed for regulatory approval, and pursuing a potential fourth indication for fulcertab. So a very clear shift towards long-term growth objectives through strategic pipeline investment, leveraging that improved operational efficiency to fuel innovation.
It really sounds like Biogen is looking beyond the immediate results, really focusing on shaping its future. Let's zoom out a bit. Talk about the broader industry context, especially in the Alzheimer's market. What's going on there? How's Leqembi positioned?
Yeah, the Alzheimer's market is definitely undergoing a significant evolution right now. It's dynamic. Leqembi's uptake is finally gaining that crucial momentum we talked about, which is vital, especially as Eli Lilly's donanemab approaches approval. We're seeing a real competitive landscape emerge. Biogen believes Leqembi still holds the majority of market share, maybe around 70%, which is pretty impressive given the looming competition.
70% is strong.
It is. And their growth isn't just about current patients. It's driving expansion into new sites of care, making the treatment more accessible. This market is transitioning, from early adoption to a broader rollout. Presents both opportunities and challenges, naturally.
And a major discussion point, which I found particularly fascinating, was this rapid evolution of blood-based biomarkers for Alzheimer's diagnosis. That feels like a potential game changer for the whole field, doesn't it?
It absolutely does. A huge potential game changer. Testing for these blood-based biomarkers has nearly tripled in the past year alone. That's an astonishing rate of adoption. There's high awareness among neurologists now, and even primary care physicians, PCPs. Your general doctors are starting to adopt these tests, at least for initial screening.
So not just specialists anymore.
Right. Now, mostly they're used for triage, deciding who needs the more definitive, often more expensive, brain scans like PET scans. But there's significant potential to establish these blood tests as the standard for actually confirming amyloid presence. If that happens, it could drastically accelerate patient diagnosis, remove a major bottleneck in getting patients onto treatment pathways like Leqembi.
Wow, but are there hurdles?
Oh, definitely. Challenges remain. Educating physicians on the new guidelines, clarifying reimbursement policies, that's going to be crucial for widespread adoption. The science is moving incredibly fast, but the healthcare system infrastructure needs to catch up.
That makes sense. So that speaks to making diagnosis easier. What about making the treatment itself easier? Another key differentiator for Leqembi seems to be the potential subcutaneous formulation. Can you explain the significance of that, especially with its PDUFA date coming up?
Yes, this is potentially huge for patient convenience. The subcutaneous formulation for Leqembi. It has a PDUFA date later this quarter, specifically for the maintenance dosing phase. PDUFA date, for those unfamiliar, Prescription Drug User Fee Act date. It's basically the FDA's target deadline for deciding on a new drug application. So a subcutaneous option. It means patients could potentially self-administer the drug via an injection under the skin.
Like an insulin pen, sort.
Kind of like that, yeah. Offers far greater convenience than the current intravenous, or IV administration, which requires regular infusions at a clinic or hospital. It also promises fewer infusion reactions compared to IV, which is a safety benefit. And this flexibility, especially for patients in rural areas, maybe those with limited access to infusion centers, it could significantly expand Leqembi's addressable market and really improve adherence. It's about meeting patients where they are.
Convenience and access, key factors. Okay, beyond Alzheimer's, how is Biogen thinking about its future pipeline overall? Still looking for deals, partnerships, acquisitions?
They're actively pursuing business development, yes, but with a clear focus now on earlier stage assets, trying to avoid those future pipeline gaps. It's a proactive strategy, ensuring a continuous stream of innovative therapies down the road. They seem to be aiming for more research collaborations, like that recent City Therapeutics deal they mentioned, partnering with smaller companies, academic institutions, to develop early stage stuff. Crucially, though, they say they're maintaining discipline when considering later stage M&A.
So being selective about big acquisitions.
Exactly. Being selective about buying larger, more developed companies or assets. It all reflects their multi-year strategy to reposition as this comprehensive neurology plus rare disease platform. Moving away from that single franchise dependency on MS we discussed earlier, it's about strategic, sustained growth rather than just big, potentially risky bets.
Makes sense. And finally, a minor point, but it came up. An arbitration initiated regarding European commercialization allocations with their partner, Eisai. Should listeners be concerned about that?
Yeah, management addressed that directly. They clarified it's actually a pretty normal part of these large, complex collaborations in the pharma industry. These agreements are incredibly intricate, right, spanning decades, multiple regions. So it's not uncommon for minor disagreements over, say, revenue splits or operational responsibilities to pop up and require some kind of formal resolution process like arbitration. They really emphasize that it hasn't affected their strong overall working relationship or their shared commitment to the Alzheimer's franchise. So it sounds like more of a routine procedural matter than, a significant red flag for the partnership itself.
Good clarification. Okay, now for our This Is Not Financial Advice segment. This is where we pitch an outrageous but plausible trade idea, like a hedge fund analyst might pitch to their investment committee. So given the competitive dynamics in Alzheimer's, Biogen's stated confidence in Leqembi's subcutaneous future, and their broader strategic pivot. What's the trade?
Okay, here's my outrageous yet plausible trade idea. Go long Biogen, BIIB, and pair it with a short position on a basket of companies, specifically companies that are either developing only IV-administered Alzheimer's treatments or companies still very highly concentrated in the legacy MS space with limited diversification.
Okay, long Biogen, short FAVI, Alzheimer's, and legacy MS players. What's the core thesis?
The thesis is this. Biogen's impending subcutaneous Leqembi approval, combined with their existing market penetration, will create an almost insurmountable convenience and logistical advantage. We think this will rapidly accelerate their market share capture, while competitors stuck with only IV infusions face persistent friction points, things like patient access, adherence challenges, clinic capacity. Simultaneously, Biogen's growth in rare diseases, fueled by strong pipeline assets like solonersen and their whole discipline diversification strategy, that will allow them to outperform even if there's some reacceleration of MS erosion in the short to medium term. So fundamentally, it's a bet on patient convenience and strategic diversification driving disproportionate alpha.
Alpha meaning outsized returns.
Exactly. Generating returns above the broader market or relevant index. It's a bet on their specific strategy winning out. So, to recap, Biogen's Q2 earnings call really painted a picture of a company successfully executing its strategic pivot. It seems fueled by strong new product launches like Leqembi gaining steam, disciplined cost management from initiatives like Fit for Growth, and a genuinely promising pipeline in rare diseases.
Yeah, their beat and raise quarter, coupled with that ongoing momentum in Leqembi and rare diseases, it clearly positions them for continued growth, or at least that's the story they're telling. The focus on subcutaneous Leqembi and that rapid evolution of blood-based biomarkers, those are absolutely critical catalysts to watch moving forward.
Definitely. And remember, everyone, this deep dive is strictly for informational purposes only. It is absolutely not financial advice. Always do your own research before making any investment decisions. Consult with a professional.
We really hope this deep dive helped you gain knowledge quickly and thoroughly on Biogen's quarter. We covered a lot of ground, didn't we? From the financials and pipeline advancements to the crucial market dynamics in Alzheimer's. So, what stood out to you? We encourage you to reflect on Biogen's multi-year arc, this journey towards becoming a neurology plus rare disease platform. How do you see the balance playing out between the execution risk, which is always there, and the potential for a renewed bullish case as they navigate this complex transformation?
Yeah, we'd love to hear your thoughts and any follow-up questions you might have. You can find us over at talktickers.com.
Thanks for tuning in to The Deep Dive. Until next time, stay well informed.